Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, Andy. So we're talking Netflix. It's been on a substantial run from multi-year lows that we saw last May, but they've had a couple good earnings reports over the last couple quarters, probably substantiating the gains that we've seen. Are you guys seeing the same kind of data moving forward here out of LikeFolio?
Well, we're definitely relying on the same type of data that we relied on last quarter when we had a bullish outlook on Netflix earnings, and that data was new subscription mentions, which in that quarter were up 3% year over year, and viewership mentions, which were up 8% year over year. That led us to that bullish outlook last quarter. It worked out. Netflix has popped, as you mentioned, but now we're starting to see a shift the other direction. Those same metrics have shifted from positive to negative. New subscription mentions down 29% year over year, and viewership mentions down 10% year over year. So that's a big shift from what was positive to negative. This is a big shift underway, and we think could spoil the party for Netflix shareholders on this earnings call. Look, this is still the king of streaming. There's no one even close to unseating Netflix at this point. It's best of breed by far in a growing industry, which is a streaming industry. We still think all of that remains true. It's just the stock has moved so high so fast, and now we're starting to see some reversal of fortune for the company in terms of LikeFolio data outlook. So we're skeptical going into this report that Netflix can make it 3 in a row.
Andy, your data is starting to reflect what I'm thinking about streaming, which is there's just too many. There's too much competition. It's a race to the bottom. So Netflix is the clear winner, right? They're like the Tesla of streaming. They're way ahead of everyone, and everyone else is having trouble with profitability. Now, here's the question. I can't just let you get off that easy. Are we coming to a shakeout in streaming? Are people going to start, at some point, these numbers can't keep up. The ESPN Plus, probably once football ended, this thing crashed, it looks like. I mean, what are you seeing in these numbers? How long can they sustain these horrible numbers?
Yeah, it really is. There's kind of just too many choices. I think we're all overloaded with not only, choices of what to watch, but kind of subscription fatigue. Every month we get that credit card bill, and there's 5, 6, 8, maybe 10 streaming services, and some of them I don't even remember why I signed up in the first place. I think it might have been, reruns of The Office while my kids were sick or something like that. So eventually you start canceling these superfluous subscriptions. I don't think Netflix is necessarily in that category at all. Like you mentioned, Kevin, this is the king. This is the one everybody's going to keep. But I think there's a significant drop-off in the demand that consumers have for those alternate streaming services. And quite frankly, I think Netflix will get caught up a little bit in that trend, because once you start canceling things, as a consumer, it can really snowball, and even Netflix could get caught up in some of that, especially as they start punishing password sharing. So I think Netflix, king of the basket, but this basket is moving the wrong way, maybe towards a waterfall.
Yeah, and that streaming the mentions chart that you had, it seems like just recently this quarter, we're starting to see a little bit of an uptick after a pullback. Is that sustainable here for Netflix? Because I think we all kind of can come to the understanding that Netflix is probably going to be the winner in this space due to the content that they have and the head start that they had in this space. But it seems like we're starting to see a little bump up, but you're still negative on this?
Yeah, still negative on it, because the bump up is being shared by so many competitors now, and what investors have gotten used to with Netflix is total domination and nothing but up and to the right in terms of growth, aside from what really shocked the market. I think it might have been this quarter last year or the quarter after, where Netflix really had to reset expectations. So, that kind of growth, that Amazon-like growth for Netflix, is probably in the rearview mirror. And the initial shift that we're seeing, right now towards less viewership of Netflix specifically is, at least concerning. And it tells us that executives will probably have a difficult time getting on this call being super optimistic about the rest of the year.
All right, and no Reed Hastings on that call. Andy, you guys seem negative. Do you have that earnings score for Netflix going into this report?
Yeah, pretty bearish. We think that the stock is due for a pretty significant pullback on this report.
All right, there it is. Data from LikeFolio again. Appreciate it, Andy.
All right, have a good one.